All right, traders, I'm going to be doing an in-depth price action analysis on the small cap stock MULN. This is going to help you determine where the price is going to be heading for the overall short to mid-term. We're going to be breaking down the micro and macro price action within this video. It's going to give you a much better understanding on how to determine if the bears have taken control and where the stock price will be heading if this level reacts as a resistance level where it can potentially bounce at. It's also going to show you how to determine if the bulls take control, where this is going to be on track to break out and rise up to next. So make sure you're subscribed to the channel and smash that like button. Let's get straight into the analysis. So in terms of ticker symbol MULN, we are now at a key critical level on the daily chart, and we're going to call that level 50 cents. So this is what I want to bring awareness to. This used to be major support right here on MULN stock. If you look at the 52-week chart, we're going to call it like 52 cents. That's the low of this line right here, right? As you could see, if that can react as support, the next resistance level that it would overall go to within some time, not right away, but it would be on track to push back up and break out to this next overall resistance level, which once reacted as a support level, which would be the low of this 75 cents to the high of this, which would be 80 cents. That would be the zone it goes to. So basically, MULN is at this key critical make it or break 50 cent level, right? This 52 cent level. If it can react as support, form bullish candlesticks on the daily, start to consolidate, start to pump up, start to break above this 60 cent resistance, then within time, we will be on track to pump to 75 to 80 cents. That would be the next resistance level. Now, let's discuss our downside potential and what is actually happening from a macro perspective. From a macro perspective, as time passes, this stock is consistently pushing for new all-time lows. And as you can see in terms of what it has done, you can visually see, once it cracked this 51 cent level and hit new all-time lows and reacted as a resistance level right here with this partial gap fill. There was a gap to fill right here. It partially filled the gap, formed a bearish top wick. And once it cracked and turned that key 52 cent level into resistance right here, it was a massive overall sell-off to new all-time lows at 21 cents. And as you could see, well, how is MULN stock reacting to this key critical 52 cent level? Well, it had a small breakout to 60 cents. It wasn't even able to get back to that 75 to 80 cent range. So that's signs of weakness already as it's trying to attempt to form new lower highs. But the biggest fail is this, not only is that signs of weakness, but the bigger fail is it's not holding above this 53 cent range, this 52 cent range. This is now reacting as a resistance level. There's a gap to fill here. There's a gap to fill here. MULN stock has filled the gap. It has filled the gap, and it is reacting as a resistance level, which is bearish. It's forming lower highs. There was a gap to fill here as well at this 53 cents. It's partially filled that gap, and it is trying to form a bearish candlestick right here. So based off the current reaction, this is looking micro bearish, right? So I'm speaking for the short term. I'm not speaking for the macro, but we went over the macro, right? For this to really rise up for the macro, you would need to see that 53 cents turn into a support level, right? For those of you who are looking for that massive move to the upside, at the end of the day, you need to break above this like 52 cent range and turn into support. As of now, I'm viewing this as weakness because if you looked at the daily chart, when 52 cents reacted as a support, it was able to quickly pump to about 75 to 80 cents. It's putting in new lower highs, which isn't a shock because this was just at new 52-week and new all-time lows. But it's even more bearish for the micro because not only because it didn't go to 75 to 80 cents like it kind of did like last time in a sense, looking at that key level, but it's turning that key 52 cents into a resistance level, right? So basically, to sum things up, if 52 cents were to continue to react as a resistance, it continues to stay below this range. It's forming resistance. It's forming lower highs. Basically, once it cracks 45 cents, it's going to be a sell-off to fill the gap at 37 cents. Now, this is what I want you to understand. We had a big move up from 21 cents all the way to 60 cents, right? Stock went up like 200% in about a week. It never really kind of retested the overall previous resistance, which you can say, I mean, some could say it was right here. For true strength for the bulls, it would need to stay above this top wick at 45 cents. But for a more fair evaluation, it really needs to stay above this like 37-cent range, the highs of this candle, the highs of this candle, and there's a gap to fill below. Basically, for the overall direction to remain bullish, for true strength, it needs to stay above 45 cents. If not, then it needs to stay above 37 cents, right? If it stays above 37 cents, then it's going to retest this 45 cents. If that turns into resistance, then it's really going to try to continue to turn bearish and try to crack. But basically, it would need to stay above 37 cents. It would then need to break above this 45-cent range. And then, of course, it has to turn 52 cents. So for true strength, bulls need to hold 52 cents. They need to break above it. And then it needs to break above 60 cents. Then from there, it goes to 75 to 80 cents. In terms of the bears, as of now, the bears are showing signs of strength for the micro. It's forming lower highs. It's closing the gaps. It's having multiple gap close reversals. As you could see, there was 3 gaps. There was a gap to fill here. There was a gap to fill here. There was a gap to fill here. Basically, all 3 of those gaps have basically filled, and it's been forming lower highs and going down since. If it cracks 45, it fills the gap at 37. Initially, that will likely react as support, but I'm just going to be straight up. If 37, if you ever see, I'm not saying initially it will probably bounce, but if you ever see it go under 37 cents, react as a resistance like it's doing around here, this is going to be a bloodbath, and this will get hit very, very hard if that occurs, right? So I'm simply explaining to you the key levels. If it forms a floor, if it reacts bullish as a support, then it goes to the next key level, right? So if 37 cents reacts bullish, then it goes to 45, 47 cents. If that reacts bearish, then it goes back to 37, which is overall bearish. If that cracks, then it gets really ugly, right? So in terms of your key levels in your key overall range, for those of you who are in this or interested in this, these are the levels, right? So we'll go from the top to the bottom. The top, we're going to say right now, overall, is going to be like 75 cents, right? So we're going to say 75 to 80 cents. And then below that is going to be 60 cents. Then below that is going to be 52 cents. 52 cents is that main key critical middle level. Then below that is 37 cents. Then below that is basically 52-week lows. So that is your overall range. So I gave you all the key levels. If one of those levels, right, reacts as a resistance level, it's forming a roof, it's reacting bearish, then it goes down to the next level. If that next level is reacting as a floor, it's reacting as support, then it goes up to the next level, right? So those are your key overall levels, and you have to respect how the game goes. So, if it cracks 45, it goes to 37 cents overall. If it bombs at 37 cents, it goes back to 45. If it tops at 45, then it's super overall bearish, and it's going to try to crack 37. If it cracks 37, then it goes back towards 52-week lows. If it breaks above 45, then it goes to 52. If it breaks above 52, then it goes to 60. If it breaks above 60, then it goes to 75, then it goes to 80, right? So now you understand how to read the chart. You understand, okay, if this key level is struggling, reacting as a resistance, it should go to this next level, right? I'm not saying it's going to go all the way down to like the 3rd, 4th, 5th, 6th level. You take it one level at a time. It's one level at a time. And then you get to decide your trading plan, your game plan, what is that you want to do, right? So just understand what's happening. It's forming lower highs. It's forming resistance. It's on track to go bearish. It's on track to fill the gap. All it's doing is filling gaps. It's filling these gaps. It's having a reversal once it fills these 3 gaps. Then it's going to try to go back down to fill this gap, have a short-term reversal. But to truly go super bullish, it needs to break above this like previous low right here. I mean, just look at this pattern. Look at this red candle right here. Look at this green candle. Look at this red candle here. Look at this green candle. Has a nice pump, right? But once it reacts, this red-green pattern reacts as a resistance level like it did right here. Massive sell-off. And you could see right here, this green-red pattern, like this overall pattern that I pointed out, is currently reacted as a resistance. And there's a gap to fill below. So for the short term, this looks absolutely horrific, right? So I just want to point out all these things so you understand what it is that you're getting involved in. You know, say you're new to my channel, you're new to my style of trading, stuff like that. I'm pointing out the gap close reversals. I'm pointing out the key levels. I'm showing you what would need to occur. I'm simply explaining, okay, if this reacts as a resistance, it's forming a roof, then it goes down to the next level. If that reacts as a support, it reacts as a floor, then it goes up to the next level. But overall, for the bulls to be truly in control, it needs to stay above 52 cents and it needs to pump. If not, it'll go back to 37 cents. 37 cents is make it or break. Initially, there will likely be a bounce at 37 cents. But for the overall direction to flip, to continue to go up, to see something truly crazy like this massive move, right? It needs to bottom towards 37 cents, right? So keep an eye on this pattern. You could see we're seeing a very similar pattern in a sense. There's a gap to fill below right here. It partially fills the gap and then it just goes crazy, right? So basically, it would need to bottom at this gap fill towards 37 cents. And then once it can turn 52 cents into support, once it can break above this gap right here at 54 cents and turn that into support, that's when it just goes stupid bullish to 80 cents. That's what would need to happen. It would need to bottom at this gap. And then once you see this gap break out, turn to support, it's forming bullish candlesticks, right? It's forming a floor, not resistance. Right now it's forming resistance, lower highs. It's forming a floor. It's breaking above. It's looking bullish, green bullish candlestick on the daily. That's when it goes super bullish, right? So I'm explaining to you the reactions. I'm explaining to you what to look for. But in terms of what we're seeing right now, we're simply seeing short-term bearish confirmations, and we're simply seeing on track for 37 cents. That's what we're seeing right now. It could flip as time goes on. But you know what to look for, right? You know what to look for. Bullish candlesticks on the daily, it forms a floor at this level. That's when the crazy bullish move occurs. Not saying it's going to happen, but if you see it, you then know what will happen. And in terms of what we're seeing right now, we're seeing a bunch of gap close reversals. We're seeing bearish candlesticks. We're seeing lower highs. So it will be on track to go back to 37 cents. And if it flips, right? This is what the market is telling me right now within this very moment. And you could take advantage of the present moments however it is that you want to, right? In terms of the best overall levels, 37 cents would be the best current level to be buying the dip. For a move, like look for that partial gap close reversal, previous resistance reacts as support, then it starts to blast off a little bit, right? So you can look for that if you are interested in this. And then in terms of bears, I'm not interested in shorting this stock. There has been very, very heavy volume on the option chain with people going with, further term call options at a 50-cent strike. But this is something that doesn't really spark my interest with options. But for those of you who are looking at that crazy bullish move, like I said, what I can really tell you is you need green bullish daily candlesticks above this 54 cents. Once you get that, you're really going to see that strong breakout. And what could happen first is it can go back down to 37 cents, flip bullish. If it can break above 45, then it goes to 54. If it breaks above 54, then it just goes super bullish. So that's what I want you to understand. This is all going to be relevant within time. Write down all my key levels. Take the notes, right? So again, 37 cents, 45 cents, 50. The most important ones are this: 54 cents and 37 cents. Those are the most important. This reacts as support, it goes bullish. This reacts as a resistance, it goes bearish. And it's going to trade in between this zone. You see this crack react as a resistance, bearish. You see this breakout form support, super bullish. So what I want you to understand, right? I want you to understand is you're in this channel. You're in this channel right now. And the channel is like the overall channel, like best level channels. 54 cents to 37 cents. That's like your overall channel, right? We should see some sort of initial bounce at this 37 level initially. That doesn't mean it's going to hold up within time, but initially we should see some sort of bounce, right? So basically we're on track to go to 37 cents within time. It could bottom a little bit higher. And then what it's going to do is it's going to try to pump back to previous support. Your previous support is right here at 45 cents. That's what it's going to try to do. If that reacts as a resistance, that's overall bearish, and then it's going to try to crack 37. If it breaks above 45, then it's going to fill the gap. There's a gap to fill at 54. If it breaks above 54, super bullish. Cracks below 37, super bearish. Initial reactions will likely be reversals. Initial reaction at 37 cents, likely a reversal. But if it can then break above 45 and break above 54, that's when it goes stupid bullish. That's my thoughts. That's my analysis. This is all going to be relevant. It's going to take time. Right now, it's just kind of resting, forming some lower highs, trying to fill this gap below. So it's not going to be doing too much, in my opinion. But I wanted to break down the technicals, and I wanted to break down the price action analysis, because this is what you really need to understand in terms of reactions, trend direction, what to look for. So that should really help you. For those of you who are like super bullish on this stock or whatever the case may be, or maybe you want to, add some, maybe you want to enter, just whatever the case may be, right? I'm just breaking down the price action analysis. Me personally, this particular stock doesn't spark my interest, but I will say this: even though it's consistently pushing for new all-time lows within time, there has been some nice rallies. There has been some nice rallies throughout the years where it has had some big pumps. So if I were interested in this particular stock, I would show some interest at this 37-cent level for a nice, nice trading opportunity. And the target, so the way I trade is in terms of like swing trading or scalping, I have one target. So if I buy at 37 cents, I don't hold to the moon. What I do is I buy at 37 cents and I say, okay, where's the next resistance level? Right here. The next resistance level is at this 45 cents, which is previous support. Gap close reversal, rips back to previous support, right? So what I would do is I would buy towards 37 cents if it looks bullish and I get my bullish confirmations, and then I would take my profits at my target. I typically wouldn't even see how it reacts at 37 cents, right? If it reacts bullish at this 45-cent level, if it reacts bullish, then it's going to try to fill that gap at 54 cents. But if it reacts bearish, that's super bearish. And then it's going to try to go back to 37 cents and it's really going to try to crack that, because that means that previous support is reacting as a resistance, which means the overall trend is still bearish. That's what people don't understand. Like if it bounces at 37 cents, that doesn't mean that it's overall bullish. That just means it's bouncing back to try to go back to the previous support level. But if it tops out at the previous support level or forms lower highs, then the overall trend is still bearish. And right now what the trend is saying is, that, it's trying to flip bearish. It's trying to fill the gap below. And this 37-cent level is going to be your true make it or break it level. So in terms of initial reactions, like I said, it should initially bounce off 37 cents. It's going to try to pump to 45 cents. If it tops at 45 cents initially and it's just looking bearish, and then once it drops to 37 cents, overall, man, not a good sign. And it's going to try to go bearish and crack that. But if the initial reaction can be it bounces at 37 cents, forms some support at 40, and then breaks above 45, then it's going to try to pump back to 54. And if you see this above 54 and it's breaking out, then it's going to try to go super bullish for the break above 61 to 75 to 80 cents. So what I can basically tell you is, if the initial reaction is like overall bearish at 45, not a good sign. But if the initial reaction is overall bullish at 45, very good sign. And that's speaking once it fills the gap. I'm not speaking right now. I'm speaking once it fills the gap. For true strength for the bulls, and like I said, in this type of play, in this type of situation, I would not rely on true strength on a stock like this. It looks like it's going to go to 37 cents within some time. But for true strength for the bulls, the way I see this is, if they can't break above this 54 and turn that into support, it's not even going to have a chance to hold up at 45. It's just going to crack through within some time and fill the gap. So I'm really not even going to say for true strength this needs to stay above 45 cents. Basically, the way I see this is, for true strength, it needs to break above 54 cents and it needs to quickly turn 52 cents into support. That's how I kind of see this. If it can't go above this gap and turn that into support, it's just going to be on track to really crack 45 cents. That's why I'm not really saying, it needs to stay above 45 cents. What it needs to do is it needs to break out and turn into support. And it's just not looking like that right now. But that could change. But this just isn't looking overall bullish for the micro. But yeah, that's what I want to pay attention to. And just know, if those key levels react as support, then it goes to the next level. If those key levels react as a resistance, then it goes to the next level. And I pointed out everything it is that you need to understand. And we went over how this key 52-week support is reacting as a resistance. Therefore, it's on track to fill the gap. Initial reaction should be a reversal to 45 cents. If it is 45 cents and the initial reaction is bearish, overall trend is still bearish, it's going to try to crack 37 cents. And if it were to go from 37 to 45 back to 37, this is going to get absolutely wrecked. That's just what's going to happen. So I'm being very blunt. I'm just being very honest. You know what to look for. You know what reactions to look for. I went over the bull case scenario and I went over the bear case scenario. Do not make trades or do not make investments based off of emotions or purely just fundamentals. Understand what the chart is telling you. understand what the reactions are telling you at these key levels, understand the risk involved. Okay, it's reacting bearish at this level, so if I choose to hold, then that means I'm risking the next level, right? If I don't cut my loss. And it works both ways. So just write down everything I told you and just use it to your advantage, however it is that you want to. So I hope you guys enjoyed this lesson. Make sure to subscribe to the channel. I will see you in the next one. And that's going to be wrapping up today's video lesson.